What if you could trade places with the government and have them pay you? There's a safe and secure way to have the government write you checks yielding returns of 10, 18, or even 25% per year. Welcome to one of the best kept secrets of investors looking for high yielding, safe returns: tax liens. So what happens if you don't pay your taxes? Every year, millions of people do not pay their property taxes. Cities and counties count on property tax revenue as their main source for providing necessary services, such as police and fire protection, roads, public schools, and much more. So what happens if you stop paying your property taxes? Well, the government needs to recover the money owed to provide these services, so they place what's called a tax lien on the property. Well, what is a tax lien? The dictionary defines a lien as the legal claim of one person upon the property of another person to secure the payment of a debt or the satisfaction of an obligation. A tax lien is claimed on an individual's property as collateral to ensure the settlement of a tax-related debt owed to the government. The debt is initially owed to the government that imposes the taxes. The tax is paid for government services like traffic lights, roads, and parks. However, a lien itself does not get the government their money. So they hold a tax sale and sell those government liens to investors. This lets the investor, you, step into the shoes of the government and hold a first priority lien on the property. Once the lien has been sold at auction, the purchaser of the tax lien has a legal claim against the property. Not only does the investor have the right to collect the back taxes, they also collect interest on the taxes owed. This interest can be as high as 25% per year. Interest rates are fixed and mandated by the local government. If the property owner fails to pay within the arranged time frame, the lien now gives the investor the right to foreclose on the property. In this way, the purchase of a tax lien may in some cases lead to the acquisition of the property for just the taxes owed. When purchasing tax liens, there are really only two outcomes. The first is the property owner pays off the debt plus interest and fees. Interest rates can range from 10% up to 25% per year. The second scenario is if the owner does not pay the taxes and interest, then the lien holder has the right to foreclose on the property for just the taxes owed. The tax lien even wipes out the mortgage. Yes, that's right. The tax lien is superior to almost all other liens, including the mortgage. Imagine, you have priority over the banks. This is a sample house that was purchased at a tax lien. This house was purchased for $12,673 and sold for a $45,000 profit. Here's another example. This house was purchased and sold for a $35,000 profit. So unlike the stock market, tax liens are not subject to market fluctuations and can be used to calculate a stable cash flow that can help your portfolio grow. Tax liens can be one of the safest and highest yielding investments if they are done right. There are risks involved in every investment. However, with tax liens, this risk can almost be completely eliminated if you do the proper due diligence. Risk occurs from purchasing bad liens on poor properties. Every lien has a potential to not be redeemed, so you must know what you are actually buying. You could potentially purchase a lien for more than the property is worth. If this happens, your investment will most likely be worthless. Also, in many states, further action is required to protect the rights of the lien holder. If investors are not aware of these steps and do not comply with the regulations, the lien can be forfeited and you will lose your investment. Also, tax liens are illiquid. Generally, your money will be tied up for the entire term of the lien. Terms can extend up to 4 years. So your money could be tied up for 4 years. Most liens are redeemed, however, before the property can be foreclosed on. One county in Illinois has had only 3 residential properties in the last 35 years that the liens have not been redeemed. One last note. Tax liens are a way to either grow your bank account or grow your real estate portfolio. No matter what the late night gurus say, you will probably not purchase your dream house for pennies on the dollar. You can, however, purchase some great investments and take over property for a fraction of the value. You can learn more at the National Association of Tax Lien Investors at natli.org. At NATLI, our goal is to teach successful tax lien investing to as many new investors as possible. We believe that tax lien investing is the surest, safest road to total financial freedom. Registered members receive our tax lien investing ebook free with valuable information and tips on tax lien investing. Members also receive educational training, up-to-date information on tax lien laws and statutes, regular updates that keep tax lien investors abreast of the latest strategies, tips, and tactics for successful tax lien investing. You receive ongoing educational opportunities via the internet, access to our yearly seminar. You can ensure that the educational products you buy are beneficial and accurate by reading our reviews of products. Members also receive members-only newsletters sent directly to your email inbox. And best of all of this is free. So go to natli.org and register to receive all these benefits.